Hey everybody, I'm Brian, that's Shane. Welcome to your 2-minute weekly housing fast break. We'll get to the mortgage rate and economic and election news in just a moment, but first, here's Shane with our housing update. Good morning, Shane.
Good morning, Brian. Lots of election news.
A lot of news.
All right, I got a few things for you today, folks. One, the 90-day average list price in Maricopa County on single-family homes barely ticked down this past week. We dropped a whopping $90 over the previous week, and now sitting at about $579K. The average price on condos dropped a little more significantly, and the data shows that I'm sitting at about $360,000 right now. Two, single-family home levels continue to rise. Our 7-day average inventory is now quite a bit higher than what we've ever seen in the past 5 years. Well, our 90-day average inventory is sitting at the second highest point we've seen in the last 5 years, but it's still about 500 units behind where we were in November of 2022. Lastly, average days on market continue their upward trend as well, with single-family homes around 79 days on market and condos sitting around 90 days in Maricopa County. This information all looks great for buyers. Brian, what do you see on your side?
Well, a lot to go over and not a whole lot of time here today. Before I do get started with my mortgage rate update, if you have any comments, if you have any thoughts on how the election is going to affect our mortgage rates and our housing market, hit us up with a comment below. We'd love to hear from you. Rates have refused to drop ahead of the election. We know that. How about after? Well, experts are making the arguments on both sides as to which presidential candidate, should they win, will usher in the best chance for mortgage rate relief. The current national 30-year conventional mortgage rate is about where we left off last week at 7.05%. FHA is sitting at 6.57%, VA at 6.58%. As for the effect of the election today, Harris represents more of a status quo for most investors, and that status quo really does nothing to push rates lower. Whereas Trump represents a greater chance of policy surprises, which can be either good or bad for rates. A popular belief has been that tariffs would increase inflation and thus rates. But Trump's previous tariff promises were largely an effective negotiating tool in the trade war with China and others, and there's reason to believe the same would be true during a second term. One thing is for certain, smart investors know that not every single campaign promise will make it into policy, and it's possible that the recent mortgage rate rout is more a function of the general dissatisfaction with the financial outlook under either party and the tone of the recent October economic data than it is investors waiting out the election to see what happens. Next week, we'll know what the outcome will be, and we'll focus on the likely effects of that candidate's policies, so you don't want to miss that. That's it for this week, guys. Thanks again for watching. If you have any comments, please hit us up below. We'll see you right back here next Tuesday for your weekly housing fast break.